Welcome to Wisdom Educational Hub. Today we are going to take the topic plus one accountancy base topic, classification of accounts and debit credit rules of accounts. Classification of account is classified into three types, that is real account, nominal account and personal account. Real account means it is related to fixed asset like land and building, plant and machinery, furniture and fixtures, etc. Debit credit rule regarding to real account is that debit what comes in and credit what goes out. For example, when machinery purchased, machinery account debit to cash. That is, machinery comes to our business, so we debit the fixed asset machinery and cash goes out. That is, cash is credit. Then another example for that, credit what goes out. When we sold the machinery, that is, machinery goes out of the business, then the journal entry is cash account debit to machinery. That is, debit what comes in, credit what goes out. It is the debit credit rules regarding to real account. Real account means it related to the fixed assets. Okay, then second one, nominal account. It is related to expense and income. The debit credit rules regarding to nominal account is that debit all expenses and credit all income. For example, salary, wages, rent, etc. are the expenses. When we expenses are paid, then debit all expenses. That, for example, when salary paid, salary account debit to cash. Then all these expenses, there is no importance to for to whom this salary is paid and all. When salary, wages, rent are all paid, it is expense, debit the expense, then the cash will be go out of the business. That is, salary account debit to cash is the journal entry. That is, debit all expenses. When income received, then that is interest received, commission received, dividend received and all, then credit to the income. That is the rule for income. Then, for example, when interest received, interest is received in the form of cash, then cash account debit to interest is the journal entry. It is the debit credit rules related to nominal account. Nominal account means related to expense and income. That is, debit all expenses, credit all income. Okay. Then the third type of account is personal account, that is related to person, organization, institution, bank and all. Then the debit credit rule related to is that debit to the receiver, credit to the giver. For example, when cash paid to Raju is that is Raju is the receiver. That is, he is the person who received the cash. Then Raju should be debited. Then the journal entry is Raju account debit to cash. Then when cash received from Raju, then at that time Raju is the giver. Then journal entry is cash account debit to Raju. Then the giver should be credited. That is the debit credit rule related to personal account. Debit to the receiver, credit to the giver. These are the types of accounts and the debit credit rule related to this type of account. It is one of the important base for the accountancy. Okay. Then debit credit rule in short. When asset increase, it should be debited. When asset decrease, it should be credited. When debit asset increase means asset is purchased. Then asset comes to the business, so it should be debited. When asset decrease means we sold the asset, so asset should be credited. Then for expenses, expense increase means salary, wages, rent and all, then expense should be debited. When expense decrease means then it should be credited. Then for income increase, it should be credited, and income decrease, it should be debited. That is, in short, the debit credit rule related to expense, income, assets and all. Okay, it should be correctly follow the rules and regulation. Then only then another topic, that is journal entry, you should got it. Okay, that is now we take the topic, that is types of accounts, debit credit rule related to these accounts. Then another important topic is the accounting equation. That is, accounting equation means in our business, assets, liabilities and capital, it should always maintain in balanced way. That is, when one thing come to the business, then one thing goes out of the business. It should be always in balanced manner. That is, the equation is asset is equal to liability plus capital. It is the main equation. That is, in business transaction, daily transactions and all present through this equation, then we can know that how this equation will fall, that how it is happen, that is equation, how it is maintained the balance and all. Then two questions we will discuss in this video. Then you will got the equation. That is, asset is equal to liabilities plus capital. Then liability is equal to asset minus capital. Then capital is equal to asset minus liability. That is, in fill in the blanks and all, this type of question will ask. Okay. Our main equation is asset is equal to liability plus capital. Then first question for the accounting equation, that is when commenced business with cash rupees 50,000. That is, in this transaction, that is, we started business with capital 50,000. So cash come to a business in the form of capital, that is 50,000. On the asset side, cash, that we show that 50,000. On that side, that is capital 50,000. Then it will equal the equation. Cash and capital are same, that is 50,000, 50,000. Then second, purchase goods for cash rupees 5,000. Purchase goods for cash rupees 5,000. That is, goods means stock. Stock is an asset. So we purchase cash for cash. That is, goods are purchased. So in our hand, cash is 50,000. We take 5,000 for purchasing of goods. Then cash will reduce to 45,000. Then 5,000 worth goods come to a business. So there is no change in the capital. That is, cash reduced to 45,000 and stock worth rupees 5,000 shown the asset side. So on both side 50,000, 50,000 same. The equation will balanced. Then another transaction is purchased goods on credit rupees 1,000. That is, purchased goods on credit means that is not a cash transaction. So on credit basis we purchased the stock. Then stock will increase. Then we not pay the cash. So it show the liability of the business. So on the next that side, that is liability plus capital, liability will increase. So on the asset side, stock will increase. Already we have stock of 5,000. Then we again purchase 1,000 rupees stock. Then the total stock is 6,000. Cash is same 45,000 on the asset side. On the next side, that is liability will increase to 1,000 and capital 50,000. Same that on both side, that is same amount. Okay. Then next one, purchase furniture for 6,000 rupees. Purchase furniture. Furniture is an asset. So for 6,000 rupees cash, we paid the ready cash. So cash will again reduce. We have 45,000 cash, then 6,000 will reduce and 39,000 will cash in our hand. Then stock of the 6,000 and furniture will come to our business, that is 6,000. There is no change on the liability or capital. On both sides it will balance. Cash reduced and the worth of 6,000 worth of furniture come to our business. Okay. Then cash paid for goods purchased. We already purchased goods on credit basis. Then now we pay that cash. So the liability will reduce and cash will all reduced on the asset side, and on the liability side the liability will reduce. On the both side the equation will same. Okay, on a correct way. Then next one, sold goods for cash 3000 rupees for rupees 4500 rupees. Means we sold the goods 3000 worth of goods we sold for rupees 4500 on cash basis, ready cash. But we sold the goods, the cash will increase to 4500, stock will reduce 3000, and it is on profit basis, that 1500 rupees on profit basis, profit will added with the capital. If loss, it will be reduced from the capital. On profit basis, it will added with the capital. Okay, three changes will take place in this transaction. Stock will be reduced, then cash increased, then on that side profit will added with the capital, then equation will balanced. Then salary paid on expenses or income, there is no need to specify that expense or income. It will, on expenses, cash will reduce, capital will also reduce. The amount change will be shown. Cash and capital will reduce, or if income, cash and capital will increase. So salary paid means it will reduce the cash 500, and also on the capital side also 500 will reduce. All that transaction will same. Okay, then paid for postage is also an expense. Expense means cash will reduce and capital will reduce. All that stock, furniture, all same. There is no change in that. This is about the equation. It will in this way equation will shown. Okay, then another question also we will discuss, that is commenced business with cash. That is on asset side, that we started business, or for the business cash come to our business. On that side our capital is 1 lakh, cash 1 lakh and capital 1 lakh on both sides. Then purchase machinery for cash 50,000. In our hand now we have 1 lakh rupees. Then we purchase machinery for 50,000 rupees. Then it will reduce the cash to 50,000. Then in our hand only 50,000 cash and 54,000 worth of machinery comes to our business. Capital is same. On both sides it will balance. Then purchase stock for cash rupees 10,000. Stock, goods means stock is asset. On asset side we have cash 50,000. Then we purchase stock for cash, then it will reduce the cash to 10,000, reduce, then we have only 40,000 cash, 50,000 machinery and stock 10,000. There is no change in the capital. Then another transaction, purchase stock on credit rupees 5,000. Purchase stock on credit means we are not paying the cash, so the liability will increase. Cash is same, then stock will increase. Stock already we have 10,000 rupees stock, then 5,000 stock will be added with the stock, that is 15,000 worth the stock in our hand. On other side liability 5,000. Then sold goods on credit means we are not received the cash. So in this situation, debtor, the person who owes money to the business is debtor. Debtor will arrive. Then debtor is an asset. It will be shown on the asset side. That is 8,000 rupees worth stock is sold for rupees 9,000. Three changes will happen in this transaction. 8,000 rupees stock will reduce and 9,000 rupees should be received from the debtor. So on that debtor we show the amount 9,000. Then it is on profit basis. 8,000 stock sold for 9,000, 1,000 rupees profit should be added with capital, means 1,000 rupees added with the capital. 8,000 stock will reduce, then 9,000 shown on the debtor, that is on asset side. 1,000 rupee profit should be added with the capital. Then commission paid is an expense that should be changed on the cash on capital, that is 1,000 rupees will reduced from cash and on capital. On both sides 1,000 rupees will reduce from cash and from capital. Then withdraw for personal use, not that means business person who withdraw for a personal purpose, not for business purpose. Personal purpose is also an expense, means drawings. It is also show the change from, that is reduced from cash and from capital, the amount should be reduced. 500 rupees should be reduced. That is for personal purpose withdrawal. Then cash received from debtor, that is on credit basis we already sold that the debtor should be paid the amount that we received the cash increased and debtor will be reduced. There is no change on the liability or capital side, that is cash increased, debtor will reduce. All other items are same. Then last one, cash paid to creditor, that is we purchased stock on credit basis, there arise the liability, then we pay that cash, then the cash will be reduced, the liability will be also reduced. This is the change in this transaction. In this way, equation should be shown, that is we understand the transaction and what change is taken place in that transaction, that is in cash, stock or any other assets, and that on the liability and capitals. In this way, that equation should be shown. That is, hope you understand the topic. It will, if any doubt, you can comment. You can ask on the comment section. I will explain again. Okay. Thank you. Subscribe my video. Like my video. Thank you.